Hey guys, Sam here, back with you on Thursday, January 18th. We're mid-morning. Had some members interested in an update on Ethereum to the dollar. Now I've got it here on Bitfinex. Now let me. The request was to see it again. Pardon me, on GDAX. But let me just show you a couple things here. So here it is. Here we're over on CoinGecko, and of course it's going to be very high here, 84%. Looking here. We can see it's pretty well spread between the dollar tether, where we'll run into that as well, Bitcoin, and then spread here around a lot of exchanges. So it's widely traded, obviously. But the majority here, 12.3, is on GDAX, so we want to go there. Number 2 is Bitfinex. Now here's the problem with GDAX here. So you can see we've got a bad tick here in GDAX. Right, so that's kind of distorting the chart, but you can see here this pivot low here, that's on September 15th of 2017. So when I go back over here, we can look at that. That's right here. This is, pardon me, that 2 is right here. It's just different color. So that's 915. So that's the 2 that we're talking about. So it will track exchange to exchange, but the larger degree here will make sense. And I wanted to come at it with a clean eye without. I mean, we'll go look at it, but without all of this, right, labeling done on it, because that can distort your view. So sometimes when you see these deep reactions like this, it's a good idea to just strip the chart bare and just go pull way out in time and say, okay, what could be happening? Where are we in the larger degree? So all I've done here, you can see I've gone back to the lowest low so if you can see, and this is something that I do a lot. So I've just gone, so if I go to auto here, I've just gone to the lowest low that I could find, which is what, $5.87 for Ethereum. That way I don't have to keep pulling over to the left. I can just highlight the line and I know I'm getting the absolute low. So if I look at that, I mean, fairly reasonable to make the assumption that I've got a 1-2. Now, where are we here in this count? Well, we can certainly get a clean 5-wave structure to get us up to the 5th here of a third. Right? Now, extreme range, granted, right? So we have extreme range. Now, if I go to log scale, and then I put it here, it distorts it in a different way. We can come back to that, but I think we're okay staying in just regular view here, just to make the point here. So there's the 1-2 here. So here's our impulsive third. No overlap of the 1. Everything's solid, right? So it's a very clean count. And then if I open it up here for you, so we look here, we get this was a little funky here, right? So the question is this the 4 or is this the 4? I think we're likely here, but 1, 2, 3, down for the 4, up for the 5. So we've likely got our third in on this larger degree. It's certainly all of the subdivision you would expect to see is there. So if I pull back out for a second now, I look at this and say, well, if this is my third that's completed, what am I anticipating? Well, I'm operating on the assumption that I'm going to put in a 4th and then go up to challenge those highs, potentially 2 new highs here in my 5th of this largest degree. So I'm going to do what I would do with any chart, any count, any time frame. I'm going to pull from my 2 low to up to my 3 high and say, well, okay, where are we? So far, pretty run of the mill, just a straight 50% retracement. Here's the high probability zone for a 4th wave between the 38 and the 50 statistically. Now that's a pretty abrupt drop straight down. So you got to look at that and say, well, okay, is that very common for the A wave to make the first straight push down? Are we doing that? Are we doing this? Are we going to do the crypto triangle that we see, that we've seen throughout, like here? So as I was just proposing, is it here? Is it here? I think it's here. Right, so we're getting these, as I've shown you many times, these shallow C waves that don't get beyond the low. But that's certainly still, that would be textbook Elliott wave trading right there. Doesn't get any cleaner than that. But we don't know, right? So it remains to be seen. So first thing, we've got to get a handle on where we are here. So if you operate on the assumption that we're looking for the 4th before we take a run up at the 5th here with first algo target here. So if you can think of it this way, algos are already long. So they just bought the 50. Their target is up here at 1730. pretty straightforward. They're not trading Elliott wave. They're just buying the 50. Well, we're trying to dance around that and see if we can get in and kind of surf behind them with lower risk reward, or pardon me, lower risk, but all of the reward. That's what I want to say. So let's go to an hourly and look here and see where we are here. So this certainly looks to me like, let me zoom in a little bit more, like we've got a 5-wave structure. So let me get over here to my A wave, and I'm going to take that wave off of it. Now that we've made the point, I don't think we need that on there. So so this certainly plays as a 1, 2, 3, 4, and then we've got subdivision into that. So given the range here, it would certainly make sense that that's an A wave, and that we're going to get more subdivision. Let me go up a degree. So this is what we're now anticipating. So if we're looking for a B, so we've had the clean 5 waves into an A, right to the 50, pretty standard fare. So now we're looking for subdivision here. Now that doesn't mean, so it doesn't have to look like this. So let me show you this. So this is where a little nuance in Elliott wave will be helpful. Okay, so within the B wave, we're expecting 3 dominant waves. So let me put the wave back on. Okay, so we're anticipating 3 dominant waves. So the dominant pivots will create a 3-wave structure. But within these, okay, there are tells that will give us a handle on where we are. And this is part of what makes it tricky, right? The tricky is that it's very hard to know where you are. So you've got to sort of step back, look at it, and say, would this make sense? Would this straight move down here make sense as the correction relative to that gigantic third wave that we just put in? Going if I pull back out, would that make sense? That this corrects it? I mean, it's possible. But more likely, we're going to see some more subdivision here as we carve out a 3-wave of the larger degree. Okay, so let me go back in here so we can get a handle on this. So here's the point I'm trying to make. This could very well be 5 waves. So we could have a clean 5-wave count here, and so we start measuring. So we pull from the high here to our first low and say, okay, well, we know we're going to run into some resistance on the way back because there'll be algorithms that'll sell this 50 and defend it all the way to the 68. Now, we could make the case that you've already got 5 waves in here. Maybe it's a front run on the 50. So possibly the A wave is in. See, this is where it's a little tricky. That's the A wave of the B wave. So let me lower the degree and change the color so you get the idea. Okay, remember, waves within waves, not only in 5s, but also in 3s. So if we have an A wave in here, that would make sense. Now we're anticipating 3 waves in the B wave. But we're still within the larger degree B wave. So 5 here wouldn't be, you would be anticipating that. But that's what makes it tricky. So is that a 1 wave? And we're putting in a 1, 2? How do you know? Well, you don't know. So this is kind of, using your judgment, getting perspective. That's why I wanted to start with a 4 hour so you can see where we are. So within this now, right? So this is where it gets tricky. And if you're not used to looking at Elliott wave, this can be a little hard to follow. But what we're looking for now is 3 waves here. Right, so it's always waves within waves. This is how you can build a case. So the odds are that we're going to correct this. Now, take note here. So how is that different than this? If this were 1, 2, and then we're going to go 3, 4, 5. How is that different? Let me change the color. How is it different if that were 5 waves up? And we went down here, potentially that's a 2. Well, the answer is it's not different. It's identical. So how are you going to know? How are you going to know what it is? And does it matter? Well, you certainly could make the case here that whether it's an A wave or a 1 wave, that the trade here to buy the retracement, assuming that we're retracing this 5-wave structure, it doesn't matter, right? So you potentially got a profitable trade here. So just again, hypothetically, if we were to come down here, and I'm not measuring this, and we were to go up and head towards the 65. Okay, well, where would our stop need to be? Our stop would need to be below the A wave. All right, so what do you get? 2.43 to 1. You want to be a little more aggressive when we get a pivot down here. If it's technical, all right, 618 or the 50, you could tighten that up and say I'm going to be below that pivot on the assumption that either my 2 wave or my B wave is in. Now I've got 9.69 to 1. How do you know? You don't know. That's the thing of it. You won't know. So if you take this trade, you're kind of using, there's a little bit of experience here. There's a little bit of keeping perspective on this. Remember, that's why I wanted to start at the 4 hour so you can see how much correction we have yet to do. But you don't know. It's certainly possible that this is a 1-2 and we go 3, 4, 5 and up we go, and we'd be putting in the 1 wave of the 5th. You don't know, right? And there's no way for you to know, other than some experience and some perspective on the size of the wave that you're correcting. So if you take this and you trade it up, you could still certainly make money there. That's nothing wrong with that trade. So if I do this and then I go down again, okay? So I had a 9.69 to 1 trade that was in the middle of that, yet the thing is still correcting down. So I'm buying into either the 3rd wave or the C wave, yet this thing could still. That's why you take profit at targets, right? Certainly in this case. That's why you take profit there, because you don't know yet what it's going to be. Now, how would you know? Okay, here's the only way that you know, and it happens after the fact, right? You're now starting to give. If you don't take profit here, and again, this is hypothetical just to make the point. If you don't take profit here, we start to come back down. Well, either, again, one of 2 things is happening. If this is an ABC, you're going to get a 1-2. Now you might get this. So now you're going to get 1, 2, 3, 4, 5. Let me put the wave on there. I know this gets a little tricky, but try and stay with me on this. Okay, if it's an ABC and we're going to hit the B here, we're looking for the 5 waves down to complete the C wave, right? That's would be the expectation, to get the C wave down here at the 618. Where's my C? Where are you? Are you way over here? Yeah, you're over here. Okay, so that would be that. So this would still play as potentially my 4th. Do you see that? So let me put the wave on that just to kind of try and clear this up. So you could very easily take this trade here. You don't know if it's a B wave or a 2 wave. You're going up. You're anticipating resistance at the 618. We know algos are likely to be sellers there. They're defending the first sell, which was at the 50, which we may have already seen. Now we're going 3 waves down. The only way that you're going to know whether or not you have a 1 wave or whether or not this is going to go down as a 5 is what happens here. Now, let me take this off. So you're clear that this could be A, B, and we go down for the C, and the 4 ends up being here rather than here. Okay, we get 1. Here's our 2. We up 3. We don't know. Is it a 3 or is it a B? Don't know. Okay, so let's assume that it's going to be. Let me take this off. That it's going to be the 4. So then how would we know? Well, the only way you're going to know is if you get that. Now you've got a 5 wave. Now that would imply that the correction is over, and because you got 5 waves here, you are now putting in the 1 wave. So this doesn't happen. This doesn't. Well, this you'd still get the waves here, but it ends up being a 3, 4, and you don't know until you get the 5. If you get the 5, then you have a 1 wave of the larger degree doing that. That's the only way you know. So thus, why I consistently harp on the idea of 1, you sure as hell better have a stop on your trade. And 2, you take profit at targets. And if you're not taking full profit, at least you're taking partial profit. So if you take this trade here, you want to take a partial profit here. Right? And then you can move your stop to break even. That way, if it keeps going, no problem. That's just bonus money. You've already realized a gain here. You can reduce your risk now. Now you're at break even. Now you got a risk-free trade. Whatever happens there, sure. If you're hoping for the 3, 4, 5, but yeah, let it rip, let it go up. But you don't know. So all you can do is try and kind of weave in around this best you can, looking for low risk, high reward trade scenarios, because there is simply no way to know, other than let it unfold and use judgment and some experience based on, again, that's why I started on the 4-hour. This would be surprising that entire gigantic third wave was corrected just in one abrupt sell-off. Not that it's not possible, but it would be surprising. So my suggestion would be so if this plays this way, I may very well take that trade. What's wrong with a 9.6 to 1? I have no hesitation taking that trade, still unsure of where I am in the larger degree. My instincts would tell me that likely that's going to be a B wave and that we're going to end up going back down. That's would be my, based on a lot of years of doing this, that this is not complete. It's not enough, right, to complete that giant third. But, listen, I'm wrong all the time. That's why sure as hell I'm going to have a stop on that. So again, look, if you took this, let's take this off. All right. So if you're under the assumption that you're trading a 2 there, right, and you're going up for the third, there's certainly, all right, I'm going to take this off just so try and not confuse you. Okay, so let's get the wave on this. Okay, if this comes up and we come down, there's certainly nothing wrong. There's nothing wrong with taking that fourth. So if we measure that, again, this is all hypothetical. If I were to measure this and I go up to a third here and I come down to this for a potential fourth, I'm not saying don't take that trade. I would likely take that trade. So again, if I take this trade and I'm right in the sweet spot, 38 and the 50. Okay, I got an algo target up here. This is the trader's choice, how much risk you want to give it. If I'm on the other side of the 65, what have I got? 2.8 to 1. The fourth is never going to be as juicy as the third. That's why buying the 2, that's your money-making wave, right? You're going to have higher percentage. But, if this goes up a little higher, then we come down here. Now I got to change that. We front run the 50. It's not going to get that much better. There's 3.5 to 1. So the fourth to the fifth is never going to be as profitable as the second is taking the second for the third. That's why we're always trying to get the third of the third. That's your money-making wave. But guys, there's just no way to know, which is why all you can do is trade probabilities and then try and defer to the larger degree and get some sense of what's most likely. Right, so wow, I'm going long here on this, but I wanted to give you that reference here because we don't know what it's going to be. You never know. So all you can do is play the odds and have a stop on it. Okay, if I get stopped out, all right, okay, maybe I'm wrong. Maybe it's going down here, and I'm gonna put in that C wave. Maybe I'm wrong. So I want to be out here. I'll take the small loser. I'm not gonna blow my account up. But if I get this, oh, okay, well, shit, then I was wrong. Then that is the correction. And I've put in my 1 wave. Well, what's next? If that's my 1 wave, what am I doing next? Well, I sure as hell am looking for that 2 wave. If this plays, well, then what have I got? I go to the next degree up. If I get this, then I'm taking that 2, right, looking for that. Because we're still under the assumption that this is a 3-4 and we're going to go up for the 5. Let me change that color. Do you see that? So I'm certainly going to take the 2, right? If this goes into 5 waves, odds are I don't have a B wave, right? Because a B wave is going to be 3. The B wave would have stopped here and rolled over, right? That was this scenario. If it stops there and heads down and I get a 3-wave structure, then it's a B. If I get a 4-5, well, likely I've got a 1. I wait for that 1 to complete, and then I look for the 2. See it? Right? So, but this is the tricky part. When we come up here, is it a third? Is it a C? Is it the C of B? Is it the third of 1 of the 5th? Right? I know it's crazy to say it, but this is how the market works. And this is, as a trader, if you're going to apply Elliott wave to this, that's what you're looking at. It's just a matter of trying to find those odds, and you're going to get stopped out all the time. I get stopped out all the time. Right? But as long as you don't let one of these get away from you because you weren't disciplined about putting a stop on it or getting out, or if it blows through your stop, you get the hell out. Because you don't know where you are now. That's what happens to new traders. They go, oh, man, it went through my stop. What do I do now? You get out immediately at whatever price because you don't know where it's going now. That would be my advice to you, right? I mean, you do what you like, but that would be my advice. You know, if your stop gets run through, that you don't go, oh well, I guess I'm a holder now. I'm just gonna wait for it to come back. It's never a good idea. Sometimes here's the problem with that. In 2017, you were made whole and probably ended up with a profit. The problem with that is it reinforces the bad habit. That oh, if I don't, I don't use a stop, it'll come back. Right? Do you really think out of God knows how many coins that we have that they're all going to come back? Are they all going to come back? We don't know. My guess would be not all of them. So do you want to be in that coin that doesn't come back, and now you've just buried your account in a coin that you just every day you're checking it, going, is it up yet? Is it up yet? Man, there's so many other opportunities I can't trade because I've got my entire account buried in this trade. It's not the way to do it, guys. I've been doing this for a long time. There is no mistake I have not made and lived through. None. I've done them all. So when I harp on money management and risk control, it's coming from painful experience, not from a book I read. I lived it. I bled it. So trust me when I tell you, if it's time to get out, get out. Don't rationalize. Don't, it'll come back. These things always come back. And even if it does come back, that's the worst thing that can happen because you've just reinforced a bad habit. Next time it happens, you'll do the same thing. And eventually, one of these won't come back. All right? I didn't mean to get on such a rant here. Oh, sorry. So here we sit with this first wave in, and all we've done is got to 50. Now, the other thing, just if that everything I just went through just is like, that's insane. I'm not messing with that. You could just be buying the 50s. You want to simplify? Just trade the algo pulls. You could do just fine. Pitchforks and algo pull and fib pulls be very profitable as long as you maintain discipline with your money management. Right? Remember, that's where we started. You don't want to get into all that Elliott wave stuff. It's just voodoo. You don't understand it. You don't want to take the time to try and understand it. Well, look here. The algos that bought here are already doing pretty well. I doubt they didn't buy just a little. Right? That's Ethereum to the dollar on Bitfinex. I promise you that was some size that bought there. So where's that going? They don't give a shit about an Elliott account. There's their target. Again, it's not crypto Bill sitting here buying it. That's a piece of software buying that. They're going to just stay long with it till it gets there. Then they're going to sell it and take some profit. Right? So your choice. How do you want to approach the market? All right, that's probably enough. 22 minutes, probably enough on that. Didn't mean to get on such a rant, but hopefully that gives you some things to think about.